Hey, this is Colin from Blackjack Apprenticeship, and I'm joined once again by Joe748 and SD1. How you guys doing?
Solid.
My cup is empty, so I need another refill of something. Cold brew, maybe?
People are going to think we have to be somehow sponsored by Slingshot Coffee. Found at Sprouts, local market.
Slingshot or Sprouts. It's Colin Jones at blackjackapprenticeship.com. Reach out. We will take the sponsorship.
They might literally offer us $10 a podcast.
We don't want the money. We just want the product. We just want a free product.
That's it.
Yeah, that would be nice. And maybe a little swag.
Always swag.
All right, we're here to do a mailbag episode with Mr. SD1 and Mr. Joe748. So let's jump right into people's questions. Sound good?
Let's do it.
All right, the first question is related to sitting out when the count is not favorable. And the question is, do APs literally just keep going in and out as the count changes at the table?
Yes, absolutely. It's a little nuanced because as your bankroll grows, you can get solid heads-up games and really solid rounds per hour. You can kind of overcome a lot of negatives, but still, even then, like if it goes too negative, I still bounce out, especially if I have a heads up on a no mid shoe, because then they have to shuffle. But like early on, yeah, man, Wonging is everything. Negative counts will destroy you. Paying rent constantly when you shouldn't, and higher price rent, it's just a bankroll. I think people get really nervous about jumping in and out, but you don't need to be. What's going to happen, worst case scenario? You get backed off. Guess what? It's going to happen anyway.
I think the nuance I would add to that is to not do it in a way that is annoying and going to cause problems at the table. So I am a huge fan of Wonging in. What I'm not a huge fan of is if you're sitting there bothering the other players and the dealer by sitting out, hawking the cards, and them saying, do you want to play? No. And then all of a sudden the count gets good and you jump in and then it drops after one hand and you jump out and you jump in. I think that there are some little bit less experienced card counters that are doing this in a way that is really obvious and is maybe a little more what James Grosjean talked about, being a nit at the table.
Yeah, and I think that the opportunity to Wong also has a lot to do with the store that you're at. So like if they have one playable table, you're going to be a nit if you're Wonging like that. So pick places to Wong that have multiple tables that you can kind of rotate around and not look so obvious doing it. Like that's a big deal.
I'm going to agree and disagree.
Yeah.
Both at the same time.
Oh, yes.
There are times when if I'm playing heads up and it's the best table in the pit, I'm staying there because it's the highest EV table. Like someone keeps coming in, I will sit in and out, in and out, in and out. If I do it once, I could tell it sort of irritates them a little bit. Then I'll keep doing it to get them to leave. And then I can go back to hammering away heads up, playing all the negatives myself. And the other thing is, I don't think we exactly touched on it, but if you have a certain size bankroll, small, like 5,000, somewhere around that range, you have to Wong out. You have to Wong in and out certain games. It's just not safe to play.
Even a 10K bankroll, I would say. There's one thing that so at boot camp, we do a lot of dealing. That's one of the greatest things. You get dealt to by a pro over and over and over. And we obviously want to challenge them. So I always try to point this out to them. So we're loading the decks, right? We're putting a bunch of low cards in to pop the count. Well, depending on how many low cards we loaded in, a lot of times you'll see them just getting destroyed.
Yeah.
Why? Because it's playing like a negative shoe.
Yeah.
Because all the tens and aces are back here because we want to make them make decisions. And I always try to point that out. I'm like, this is how devastating it can be. Like that 7-card run to 21. Yeah, that's normal, especially in negative counts.
I am not saying people should play counts they can't afford to play, but I think there is a more nuanced way of doing it. So you said in the secret. We just recorded the other interview podcast with you. You said that your act is you want to give them all the signals that you're a gambler.
Yep.
And there can be this way that I think someone with no act, they're sitting at the table and they're like, "Do you want to play, sir?" And you're like, "No." And then you're just staring at the cards, arms crossed, and then it gets above a true one and they're like, "I'm going to play." And you play, and then it drops below a true one. "I'm not going to play." There is a more nuanced way of doing it. When I play, I don't sit at the table back counting. I'm like standing behind, like I'm interested in the game, but I don't know if I feel like playing blackjack. It gets to a good count, and then I start playing. And if it drops below, I'll usually say something like, "Hey, I'm going to sit out a hand or two. I'm getting crushed," or whatever. And if the count doesn't recover, I'm going to step away and probably just go to another table. I'm not going to do this in and out unless I understand what you're saying, Joe748, about, you're doing it intentionally because you wanted that table heads up. But I fear that a lot of these, 5 or 10K bankroll people are burning themselves at games by, yes, avoid the negative counts, but try to do it in a way that you're not pissing everyone else off and looking not like a gambler.
Yeah. Just because you're not actually sitting and playing, you're in the casino. As soon as you walk in those doors, that act is on. You have to be acting like a gambler. And part of that is reacting to what's coming at you. It's just so easy. You're just making up crap that you see, just like every gambler does. The counts dove. The dealer just won with a multi-card 20 or 21, or they had a 20. And you're just like, you can't beat this dealer. Walk away. It makes sense.
Or another situation might be that you're not necessarily just wonging in. Let's say that you're playing a table and it goes negative and you're like, "Oh, well, Colin said I don't want to look like a nit, so I won't leave a negative count." No, you can leave that negative count and you could say, "Hey, hold my spot. I'll be right back. Go to the bathroom," because there's a bankroll size at which the cost of playing through that shoe is far higher than the cost of walking away and maybe missing out on the opportunity of the count coming positive again. Just be gone for 5 minutes rather than this person hawking the table, looking weird and irritating the players right there. That's my advice for people's longevity and to kind of like avoid this very nitty. If you want to do that, that's fine. I just want to bring some attention to, there's a way that can do it that blends it. And there's a way that you can do it that totally stands out and is probably going to burn you a lot faster.
Yeah, with the wonging out thing too, I want to add this. You know how many fake phone conversations I've had?
Too?
I try to make it like as hysterical as I possibly can. I was actually at a Caribbean casino recently. It was like the last time I counted cards, and I was with a couple other AP friends too. And I'm playing a $100 min game, and I don't care how big my bankroll is. That is really costly rent when it goes negative. I step out and I have an entire conversation about my daughter, like right next to the table. I don't have a daughter, wanting pizza for dinner and not being able to decide what kind of pizza that she wants. For the next 2 nights, that same dealer and that same pit were asking me about, did she get the pizza she wanted? Those things, they matter. They were laughing at the conversation because this is a real conversation a father would have about their kid, and they're not thinking, that guy's stepping out because the count went negative. That's not happening.
Full disclosure, I was on the other end of that phone call playing the part of SD1's daughter in a high-pitched voice. So
What did you get? Pineapple? All right, moving on. Do you think technology may eventually ruin card counting, i.e. face recognition and AI?
No.
Bold take. Why?
I think the only thing that could possibly ruin card counting is the elimination of cash.
I was wondering if that was what you were going to say.
However, I think that in my lifetime and quite possibly the next 2 lifetimes, that's a stretch, because in America, taking away cash, that is a tall, tall wall to climb. Like, it's going to be very, very, very hard to do, even with everything going the way it's going. Now, that being said, probably never going to see that myself in my lifetime. I have no doubt that there will be APs that will figure out a way to beat it because we are always ahead of the casino. They are reactionary. We are not.
What about you, Joe748? You have an opinion here?
I mean, the facial recognition technology has gotten a little bit better for sure over the years, but also it's not to the level of we're hearing about it left and right. It's like only the casinos that can afford it. It seems to be getting better there at those properties. It's not getting better in this little casino in the middle of nowhere that you can play 40 hours in 1 week and make 40K. You know, that's just not going to happen for such a long time.
Yeah. This question, I get some version of this very regularly. And maybe it's about facial recognition and AI. Maybe it's about continuous shuffle machines. Maybe it's about 6 to 5 blackjack. Maybe it's about playing unrated. But there's this question about the fear of the future of card counting. And if I had to place a bet, I would say, yeah, there will be a day where card counting isn't viable. And I would have said that 20 years ago, and I would have said that 10 years ago and 5 years ago. I guess the question to ask yourself is, knowing that the future is uncertain, is it worth it for you to get into it? I remember reading Cellini's book, Card Counter's Guide to Surveillance, and I read his description of a card counter, and it was me to the T. White, male, young, money with a rubber band around it.
Cargo shorts.
All the things, it was like that was me, and I had this panic, and I was like, maybe I shouldn't do this. Maybe I should wait till I'm in my 60s and do this. You know, maybe this is all a waste of time. And I snapped out of it in 30 seconds, and I was like, no, I am having success doing this, so I'm going to keep doing this while it's worth my time and successful. And this was way pre-church team. This was before we'd made 6 figures, much less 7 figures. And I've continued to do it or teach people to do it as long as it's worth doing. Will there be a day where it's not worth doing? Maybe. I don't know. But it, to me, is a little bit of the wrong question. The right question is it worth getting into now? That's the other thing. People say, oh, card counting is a waste of time now. It's like, well, relative to what? Maybe for the person saying that it is a waste of time, or maybe they just think, well, it used to be so much better when it was single deck dealt to the last card. Like, well, that was better, but you're also getting cheated or whatever. But the question isn't, was it better? The question is it worth it now? And you know, Tommy Highland says there's a strong argument. It's as good as ever. Maybe he's biased. Maybe it's not as good as it was, but is it worth it now? And that's a personal decision.
All I know is in the last 5 years, I've known a lot of newly minted 7-figure card counters.
Yeah. You're right, Colin? I didn't. No, but another thing to think about too is think about it. Like if you're worried about like CSMs, their edge, it's going to be the same over the next several years with Blackjack. These machines aren't going to get any cheaper. If anything, they're going to increase the price with inflation to rent these machines out. So it's like these casinos are cheap. They're not going to pay more money. They're making the same amount of this game that they did 10 years ago.
Also, understand that like with technological advances, every technology operates within a certain set of rules. And there's always counter technology. We have no idea if there's going to be something that you could just simply put on that beats facial recognition. The point is don't worry about it. It's not here now. That's what I'll tell you.
Yeah, that's how I feel.
If anything, I think it would be the cheapest thing they can do is roll out a less expensive version of like that Blackjack software to analyze whatever.
Yeah.
Like if the camera becomes good enough where it doesn't have to have the surveillance agent input like ace 1, player like 2 and 3. If they don't have to do that, if it can just instantly read it and do it, I'll have that, and then we will figure out a way to get around the computer's idea of what's a card counter.
Right. And
easily.
The more technology, the more dependent they are on it. That's an advantage for us.
That's an interesting point. Next question. Do casinos know or care if I rat hole chips?
No. The only thing that they care about, I mean, Andy brought
Andy Yule, author of Blackjack Insiders. He was a guest at the boot camp and he was talking about this. So why don't you keep going?
Solid book, by the way. You should definitely read it. Yeah, no, the only thing that like a pit boss cares about in that situation is that one of their primary jobs is to account for the racks of their pit. And if you're making their job difficult, that annoys them. If they're already onto you and the rat holing is just another check of the box, guess what? They're already onto you. It's over anyway. So it's not like that's the cause of them picking you off. It's just not. Now, that being said, understanding how to rat hole is very important. You can't be taking blacks off of the table when you're the only person playing blacks.
Yeah.
There are spots that you can pick that you can have them assigned to other people. So you have to think through that. I was playing in I got along with this pit boss great. He freaking loved me. And I ended up getting half shoot, not on his shift. But he came up to me. I was playing late one night, and I mean, I took $100K from this casino. That's probably why I eventually got half shoot. But he came up to me one night, and there was a dude playing next to me. So it was only two of us on the table, and he gets up and rolls out, and he was playing black too, and I had managed to rat hole probably like $1,000. And you could see he was flustered. He asked the dealer because his rack's not right. And she's like, I mean, I think he did. You know, I'm playing dumb. He looks at me and goes, well, how much do you have? And I'm like, what? I have this. And I was like, oh, you're worried about the now I get it. Yeah, that guy just walked off with a bunch of chips. He goes, thanks, man. I really appreciate that. He just wanted a reason to get rid of that responsibility that he has. So he let a player tell him they just walked with black chips, and he was good with it.
There are some really cool stories. Beach Bum, was that his name? BJA member, he came to a boot camp, and he had a fun story shared on the forum that the casino had him as a like down 50,000, but he's actually up 50,000 at one casino, and it was because at the right times he was taking some chips off the table. I think some people, they're afraid if I put chips in my pocket, the casino is going to know I'm an AP. That's not true, and I don't like having too many chips on the table in front of me, not for casino counterintelligence reasons, but because I don't want gamblers seeing me with thousands or tens of thousands of dollars sitting in front of me. But again, yeah, the best time to do it is if someone else that's betting those denomination of chips is leaving to get those in your pocket.
The surveillance people that I've spoken with directly and also read, towers of chips stand out way more than rat holing. Ploppies tuck chips all the time.
Yeah.
And if my wife is with me, I will sure as crap have her come over and announce like, yeah, here's 500 and give her 1,000.
Yeah.
You know what I mean? Like I'm going to do that because you see that all the time, interaction with your partner coming over and like, don't lose it all, honey.
Yeah, because the ploppy thing is like, oh, I'm going to rat hole these chips. They don't know it's rat holing, but they put it in their pocket because they're up that much. And they're like, I'm not going to pull this out.
Yeah.
I'm going to keep this for the rest of the day. They inevitably pull it out, but that's the initial thought. So you can play into that too.
It's funny because even in slots, the plops do it too. I got to win. I'm going to take this ticket. I'm going to cash it out. I'm going to put it in here. I'm not going to spend this ticket. And they always
30 seconds later, they're at the ATM 3 times.
Yeah.
When you do this, please be sure that you're putting the chips in a secure place so they don't slide out, you know.
Yeah.
Not to go on my rant about zipper pockets, but you know, if it's the pocket of your jeans, make sure it's a deep pocket. Otherwise, zipper pocket, that's where I put those chips.
Colin, I hate to tell you that I just don't think people are using zipper pockets these days.
No!
We got a new brand of BJA zippered pockets sweatpants coming out line in 5 different colors available.
That say casinos are stupid.
Yeah.
across the butt. All right, speaking of cash, the next question is, I'd like to know more about having a lot of cash. End of question. No. No. He says, I had $3,000 in a toiletry bag on my last 2 trips, and it was in my carry-on bag. It seemed okay, but made me nervous. I think you may have advised money belts. Well, I was kind of talking about this with the zipper pockets, but he's not talking about in the casino, but more on the road when maybe it's through an airport. We talk about this at a boot camp. Are you gentlemen money belt guys?
I'm not at all.
Did either of you see the post on the forum about a guy that's worked on the other side? He's like, hey, if you're an AP, stop wearing a
fanny pack.
And I was like, oh, that's really interesting. That's not that I use one, but I thought that was interesting. And then Ping Pong's like, I've been using one at the casino since before I was an AP, and I use one today, and no one has ever profiled me from using a fanny pack at the casino.
Yeah, but he has a superpower.
Yeah, he does.
Yeah.
He does. Maybe it's different. His look, maybe it can blend in better than...
Yeah, he knows it. Ping pong, you know it. You know your superpower.
So yeah, any pro tips on this traveling with cash?
I have never had an issue. I put it in my carry-on bag. First of all, we say this at boot camp too. Biggest pro tip, get pre-check.
TSA pre-check.
Yeah.
Yeah.
Clear is even better. I like having both. But yeah, going through the metal detector as opposed to the body scanner. But like every now and again, they just are more relaxed with you. You'll get a random sometimes, you'll have to go in the body scanner. And then it's like, okay, do I want cash strapped to me? I had to go in a body scanner. This was coming back on an international, but it looked like just like the body scanners that we had. It looked the same. And it picked up on something. And I'm like, what the heck? So I come out and he's like, oh, it's your belt. I'm like, I have this belt specifically for travel. It's an elastic belt with a plastic clasp. And he's like, yeah, that doesn't matter. This is not a metal detector.
Huh.
And I was like, huh. So I take the belt off. He checks that. He goes, and it was like slow. He's like, go back in there. And I go back in. He goes, see, nothing. It was the belt. And this is like the super flat belt that I travel with. So like having stuff on you, I wouldn't recommend. Just put it in your carry-on. And I've carried a lot of cash. So one time has one, person that's sitting there looking at what's going through, flagged it. And, I immediately said, hey, can I have a private room? And she's like, what are we dealing with here? And I was like, just cash. She's like, oh, okay. And she fanned through it and she goes, all right, you're good to go. Like we went into a private room. No harm, no foul.
I think my biggest thing is have a system that you've thought through ahead of time and then always follow that system. So have a system for your cash when you're going through the airport and always follow it. Have a system for your cash when you're on the road and always follow it. Have a system for your cash in the casino and always follow it. Because I feel like every horror story I know, it's someone that had a poor system, like a not very secure way of securing the cash or whatever, or they got lax and they did something that was outside of their system.
Believe it or not, with large sums of money, you can get lax. It becomes normal, your new normal.
Yes.
Don't do that. Number one rule AP, I always say, protect the money. I was taught that by Colin Jones. And by the way, like in the carry-on situation, like my eyes never leave that bag. There's not a lot of opportunity for them to snag something. But at the same time, my nomadic bag comes with a little lock. And where it is, I can actually put the little lock on there. So there's no way a quick action could happen. And then if they want to search it, yeah, I'll just unlock and go ahead and search.
Yeah, I mean, TSA's main priority is not cash. It's not like they're the DEA, they're just looking for weapons and explosives, and
shampoo bottles that are too
right, liquid, yeah. So, and also, like, if you want to be extra safe, if you're super paranoid about it, I mean, the thing that will get you flagged is if you have a bunch of chips that are in with the same bag because it just sets it off in a different way because it's such a dense material. Put that in a separate bag.
Yeah. Also, if you travel with like a 6 decks and a discard tray, something that's thick that the X-rays or whatever it is can't see through, have that in a separate bag than your cash. You want nothing that's going to make them want to search your bag. Even so, I've been searched plenty of times, and like you said, they're not there for cash. We've probably all been in the side room where you have to explain it.
I also hate money belts. I don't like them. They're just not comfortable.
That's not my preferred
my Padawan or the guy that I lean into the most in this AP journey or whatever that I've helped kind of guide through. Like he's a huge fan of them. He's always wearing a money belt. I just don't know how he does it.
Well, good for him.
Yeah.
Next question regarding cash. Do long-term successful APs literally have their fortune in currency in their homes? And if so, what is your address? Where do you keep it?
Right.
And when will you be on the road? No. Do they keep it in their homes and live day to day on cash?
I have to have cash to operate my business. My business is in cash. My cash is very secure in my home. My home is very secure also. I have a lot of guns and 2 large dogs. Don't try it. No, yeah.
He also lives in Area 51.
Yeah. No, I mean, security is a big deal. You need to keep that at the forefront of your mind, but you do have to keep certain amounts of cash. I'm to the point in my career now that I keep only what I need. Also, like, make a lot of money. I pay a lot of taxes. I put the money in the bank so I can utilize it to make money on it. The reality in the investing world is that cash is losing money. Now, we have a certain amount that we have to operate with as our bankroll. And the idea is the EV that we could produce with it, and you have to have that. You really ideally don't want excess if you don't have to, because that is losing money. That is negative EV. So it needs to be in the system. You have to pay your taxes, and you have to be able to do something with it in some other form, however you choose to invest or start another business or whatever.
I think like a lot of young people come into this and they have this thought in their mind. They're like, maybe I just like won't pay my taxes on all these because they're not going to know and blah, blah, blah. But the reality is that once you acquire a certain amount, it's like, what can you spend all that money on? Not much. It's like the whole Ozark thing. It's like gas and grocery money. And that's kind of it. Like you can't go out and buy a house or a car or this or that. But the other thing too is like you're going to end up losing so much money not having that invested over the course of the next 20 years if you did declare like so.
Especially with inflation where it is right now.
It is
Good Lord.
Yeah, it is a negative EV thing to not pay your taxes.
I've had more than a couple APs like saying, how do you handle this? Like I have this much cash on me right now, like in my house. Like, how are you securing it? I'm like, why do you have that much cash?
Yeah, I think that's, to me, the biggest takeaway is no, you don't need to have, the person said something like, do we have our fortune in currency in our homes? No, enough for AP. And it's the same with like a trip bankroll. I don't want to bring more than I have to because there's a risk associated with it. And I don't want to have more money in my house than I need to because there's a risk associated with it. And I can always get some more money out if I'm on a losing streak or whatever. But that would be my advice. Have it in a very secure way and place, not in your freezer, not in like the vacuum bag, anything like that. And yeah, you don't need to have your fortune in your house. Next question. If I want to be pro, will it be my life playing from 2 a.m. to 7 a.m.?
No.
Only if you want it.
Yeah, only if you want to do it. That sounds terrible.
This question probably comes from some other podcast where people say they tend to get more hours graveyard shift versus daytime. But we know plenty of pros who exclusively play early morning daytime shift, and they're just fine.
I've said this before. My preferred time was to show up around 9 p.m. and it's like tables maybe start thinning out by then. This is when I was playing full time. I've played every hour of the day, but my preferred was 9 till, we'll say maybe 2. Yeah, that's a late shift. I did that because I did feel like I could get good conditions, sort of what you were talking on the last podcast where you'd be on a work trip and you'd get these really great conditions. You want to keep grinding. But no, it doesn't have to be that. And even that, it wasn't playing till 7 a.m. Maybe I get to bed at 3 or 4 and sleep till 8 or 10. But you don't have to have this reverse schedule. Moving on, what are the best ways to handle verbal abuse at the tables? Not dish out, but handle verbal abuse at the tables, both from other players and from dealers.
I always have fun with these situations. Other players that get upset about scenarios is just comedy to me. I was in the South and I was playing with this guy. Everything was good. And his wife sat down with us. And I was like, crap. Like, I like playing heads up or with one player at the most. And I'm just like, okay, let's see. It was high limit room. Let's see how long this lasts. And it was a double deck. Within one shoe, she had complained to me no less than 20 times. And I doubled myself 19. And she looked at me and she said, "You are by far the worst blackjack player I have ever played with in my life." And I have played a lot of blackjack. Now, this woman's in her like 60s. And I'm like, I'm sorry you feel that way, ma'am, but I just won that hand. And she's like, that doesn't matter. And I'm like, I'm trying to win. That's what I'm trying to do. I'm here to gamble. I'm trying to win. I like playing big. And she's just like, well, and she gets up and leaves. Her husband is still there. And he immediately looks at me and just goes, I'm really sorry about that. You play however you want to play. I do weird things too. It's fine by me. You're going to experience this stuff. So just have light, friendly banter. I play the way I play. You can point out when they do something that you normally wouldn't do. You can make up your own gambling fallacies of how you play because all the other ones are just made up garbage anyway too. So you've all heard that, like, if you're going to hit your 16s versus your 10, you always have to hit your 16s versus your 10. If you're going to stay, you always have to stay. Now, you can change that, but if you started that day doing it that way, that's how you have to stick to it. That's completely nonsensical. So I've made up a weird pattern before, and I'm like, actually, I tend to stay 3 times, and then I hit 2 times. And sometimes I use the Fibonacci sequence when I'm thinking about, like, I just make up garbage and they look at me like, what are you talking about? And I'm like, it's math and science. I'm telling you, it works. You want me to write it down for you? Like have fun with it. Don't let it get to you. It's going to happen.
SD1's like, have you ever seen A Beautiful Mind? That's me. And they're like, oh, this guy's an idiot.
Yeah. That just makes you look like more of an idiot to the pit and the dealer. When the dealer's pissed, I mean, what are you going to do?
How often do you have a pissed dealer? There's dealers that are like, you could tell they're not happy dealing to you because you're not tipping, but how often do you get a pissed dealer? Like, I'm really having a hard time thinking. I know there are stories on the forum. I know it happens, but it's not like a daily, weekly, monthly occurrence that you have a pissed dealer, right?
It's rare. I mean, it is almost always revolving around the tipping thing. I haven't had too many dealers who are super overtly rude. I have had stories like, but most of the time it's just like they start like slamming the cards down. They start like slapping them really hard, or they take your money and they like slam it down into the chip tray. I've had that, and I've had them like purposely go really slow. I've seen that happen, but yeah, most of the time it's just subtle, quiet sort of digs at you. It's not like, how dare you?
And as a counselor once told me, Colin, you're not responsible for other people's emotions. I feel like part of this question is, how do I deal with the fact that I don't like other people's emotions at the table? My approach, just play dumb. Just play dumb. And if someone, complains, I'd be like, oh, I didn't realize that. Oh, sorry. And then I'm going to do it again next time. And just by playing dumb and not even caring, giving 2 craps about what the other players think, it's a non-issue for me emotionally.
There are tons of ploppies that don't tip too. Like you're not some unique unicorn that's going in there and not tipping. It happens. And then they have people that abundantly and frequently over tip. So it's part of the game. It all washes out in the math, guys.
I think the other thing I'd say is, I don't think there's any reason to ever escalate it. You might feel like you need to defend yourself. I don't feel a need to defend myself. I wouldn't escalate it, but I might challenge and say, in some ways, this might be more of a you problem than a them problem. Like, it's not fun to have other players that are blaming you. I love the story in your talk at the boot camp where, was it a dealer or a player that said, go fuck yourself?
Oh, yeah, that was the player. That was the sweet old grandma that was playing next to me. I was sitting out a few hands. She got blackjack twice in a row. I came back in, and then I sat back out again. And that time she got pissed. She was like, why do you keep sitting out? You're making me lose over here. And I respectfully said, well, I sat out and then I saw you get 2 blackjacks in a row. And then she was like, go F yourself.
And what a great story it makes. Sure, that's no fun. But if it's really bothering you, I'd maybe say, work on not being bothered by things outside your control or other people's emotions.
Yeah, I don't know what it is. I don't get angry when they're mad at me. I have a harder time not laughing when that's what it is. It's like, I'm trying not to laugh right now. I don't know if it's nervous laughter, but it's just like, it's so ridiculous to get so angry at something. Like, I was playing with this guy who looked like a surfer version of Gary Busey. And he was just, every time someone would hit a 16, he'd be like, "Why'd you hit your 16?" And I just like try not to laugh every single time. Oh, it doesn't affect anything, but you don't know any difference.
So how do you deal with it? By not taking it too seriously and just realizing they're looking for someone to blame. They're always looking for someone to blame, and they're not going to blame themselves. They're going to blame the dealer or the other players, or the game is rigged, the casino, whatever it is, and you just happen to be the easiest target because you're betting big and you're playing. The average player plays with a 2% disadvantage because they do not play by proper basic strategy. So then they see someone that's hitting a soft 18 against a 9-10 or ace, or doubling a soft 19 against a 6, or, against splitting 8s against a 10 or an ace. And they're like, oh, this idiot hitting a 12 against a 2. How dare they?
Yeah. It's your fault. It's not theirs. They always lose money.
Yeah. Let's move on. Are there any legal repercussions to playing with someone else's player's card to avoid giving up ID?
I've done it. I'm, first of all, not legal advice from BJA. I am not a lawyer. My understanding is that it is not illegal in any way, shape, or form to use somebody else's club card to play. Like, it's just not. Just like it's not against the law for me to use somebody's Kroger Plus card. Now, they might have issue against it and they can cut you off from the club or kick you out of the casino. But there's nothing illegal about it. And one of the places I played rated at, when I returned there, conditions had changed. I knew that. So Ping Pong gave me a buddy's card, and I threw it down, was playing rated, hour and a half, get just a nasty, like, hysterical back off, go to the cage because I wasn't going to be back. And I think I've told this story. I was surrounded by like 9 suits, and it just got weird and escalated from there. And they're like, well, we know you're not this guy. You're not 23 years old. And I'm like, damn it, Ping Pong, why did you give me a 23-year-old card? But then I just looked at him like, man, somebody really screwed up when they entered my information. You should probably have a conversation with them because, no, I am not 23 years old. So who are you? I'm like, that's me. Like, I don't know what you want. We think you've defrauded the casino. And I just said, I mean, you can call it whatever you want. That's me. And I've done nothing wrong or illegal. And they let me go. And this is on tribal land, too.
I actually don't have an answer to this. I think the concern is, could the casino consider, if they wanted to make your life hell, could they consider it fraud? And I don't know. I mean, I have heard of some APs being arrested for fraud for using other players' cards.
I mean, the only times I've heard when it's been a problem is when a player uses a fake ID with their picture to get a player's card in a different name, and then they use that, and that becomes a problem.
Okay.
That is fraud.
So you need to not do that. But also, if you are going to use someone's player's card, make sure you get a peek at the podium before you execute this. Just see when they swipe the card, does the license just pop up right away? That's the other thing.
Yeah.
I was going to say that if I try to use my wife's player's card, I don't look like that. It's going to be obvious, or whatever. I try to use Joe748's player's card. If there's a picture attached to it, it's not going to work.
Yeah, and then the other thing is, you just have to ask yourself the question of what am I going to do when I have to CTR? You have to leave that point too.
Yeah.
Because it's going to be really awkward.
That's all we've got for this mailbag episode. If you hung in here to the end, thanks for listening. Hey, this is Colin, and I wanted to say really quickly that the content that we're about to discuss is for informational purposes only, and you should not construe any such information or other material as legal, tax, investment, financial, or other advice. And now that I've read that disclaimer that I found online, let's get back to me, SD1, and Joe748 talking about what we've chosen to do with money that we want to invest that we don't need for our bankroll. Hey guys, this is Colin from Blackjack Apprenticeship, and we're going to do a little bonus podcast episode with you. I'm joined by SD1 and Joe748, and we're going to talk about investing. People have asked about, well, what do you do with the money you've made that you don't need for playing? And I don't just mean like, oh, well, put it in the bank unless you go on a losing streak. I mean, as we accrue, whatever you want to call it, wealth or more money than you need to live off of, or for your bankroll, what do we do with that? How do we invest it And all three of us have tried to tackle that personally. And so I thought it might be an interesting topic. Let's start with the man of the hour, SD1. What's your approach with your assets as you grow wealth through Advantage Play?
If I could get kids to understand one thing about life and money, it would be how compounding interest works.
Yes. We studied this in high school calculus, and it was like, oh, that's incredible. And guess what? I didn't take it seriously for 20 years after that.
Also, why does it take calculus for you to get to the point of basically understanding compounding interest? A very simple financial mathematical thing. Compounding interest working against you will crush you, credit card debt. Compounding interest working for you is just an insane thing. I mean, we had this conversation about like Social Security and the amount you pay into that. If you could have just put that in just the S&P 500, what it would have done for you. Play with numbers just like you play with your own blackjack numbers. Like, and you put $100 into an account that earns 6% every single month for 30 years and do the math on it. There are calculators online that'll just do it for you. And it's an incredible thing. So I say all that to say that I know so many APs or people that think they're APs that are just hoarding cash, losing money on that cash. A lot of them not paying taxes and thinking they can, we kind of talked about this, that, I mean, there's nothing they can do with it. Ideally, you need multiple streams of income, 3-legged, 4-legged stool kind of scenario. And if you can create passive income, that's a phenomenal thing. And there's many vehicles to do that.
Yeah, I just, as you were talking, I pulled up this compounding interest calculator on NerdWallet, not a sponsor. And let's say that you're, I don't know, we'll say 35 years old, and you are making an extra $100K a year through Advantage Play, which should be reasonable if you're full-time. You should be able to make an extra $100K if you're taking it seriously. If you deposit that $100,000 and then an additional $100,000 a year, 30 years later, so at 65, which I know my problem was at 25, 30, 35, I wasn't really caring about when I was going to be 65. Now I'm 43 and then 25 feels like yesterday. But, you're 35 years old, 30 years later at 65 at 7% rate of return, which is like even a little bit below the S&P 500. You'd have $10 million at 65. $10 million in 30 years won't be worth what it is today, but you're still going to have a significant amount of wealth by being able to take advantage of compounding interest. If you don't keep investing, maybe you just do that initial $100,000 and you never add anything else, that would still be close to $1 million in 30 years.
Yeah, it's insane.
10x.
Yeah, when I was young, what I didn't understand was when I heard people say like, "Oh, you can earn 9% a year." I thought it was going to be, "Oh, I put in 100,000 and I make 9,000 each year."
Yeah.
9 for
That's
the next
common.
30 years, and I was like, "Why would I do that when I can go play?"
So then what do you guys invest in?
Yeah. So financial markets background, I have a certain amount of money that because I have the skill set and the know-how to play with my own money. So I have a certain amount set aside that I will trade on my own. And then I use a very competent CFP that I believe in, and there's a group mentality. Certified financial planner. They have a fiduciary responsibility to you. It is not like a broker. A broker makes money off transactions. They make a rip, is what it's called in the industry, off of transacting within your account or trading. So when a broker has a quarterly goal to meet, well, they can just move some money around and make a rip off of it, okay? If you have a fiduciary responsibility, you are legally required to do what is in the best interest of your client. And if you are found not to have done that, the consequences are severe. A CFP has that responsibility. And the model that they typically use is they get a small percentage 1.5 if you don't have a lot of money, and then below a point if you have a good chunk of money of the total managed funds. If they're good at their job, they're going to beat the S&P, and that's their goal, sometimes by a lot. The firm that I use, it helps that I understand the market because of my background, but I love their approach to it. And it's not one guy making a decision. It's a group decision. So I have that on autopilot. I put X in every single month. They take an auto withdrawal, and I just let that roll and build. And again, I have my play money that I play with. I own land and have built Airbnbs, so I can generate passive income that way, while also, hopefully, fingers crossed, the real estate value goes up. And lately, real estate value has really gone up. So that's another vehicle that I use. And post-AP life too, if it ever really ends, I hope to use my experiences in some way, shape, or form to start some other kind of business, because when you retire, you die. I will never actually retire. I will always do something.
Yeah. I enjoy building things.
Yeah. Yeah, it's great. So that's me personally, what I do, and I cannot encourage APs enough to look to the future and make money on their money that they have taken from casinos. Because if you don't do that, there's just so many examples of people that don't understand this philosophy and don't know how to handle money that get a windfall and they're broke within 5 years. Professional athletes, lottery winners, etc. You can go on and on. Don't be that statistic.
What's the name of that firm that you're using?
Allworth Financial.
Not a sponsor.
Not a
Again.
sponsor. My
To
boy
be clear,
Alex.
we do not have a sponsor other than Blackjack Apprenticeship. What about you, Mr. 748?
Yeah, so I, like a lot of people, got into it late-ish. I wish I started when I first started playing, but when you're young, mid-20s, that's the last thing on your mind is thinking ahead. But I'm really glad I started. The first step was just I would max out my, Roth, because I'm a self-employed person. I would do the max every year. And then eventually I got to the point where, okay, now I can put my excess bankroll that I'm not using because I'm not playing huge all the time. And now I just basically, I'm a pretty boring investor. So I do like total US stock market. And then if I have a losing year, then I can like tax loss harvest that and then buy the S&P 500 right after and then do that for another, So I'm going to switch back and forth between that each year. And then my Roth, I have more of a small cap index going in the back because that's going to take a lot longer to reach the point where it needs to. So I can wait 30 years for that because I can't take it out anyway. So
yeah, let's get into that a little bit since this is like kind of like the topic of this conversation. Small cap, large cap, Roth being mentioned.
Yes, I want to start with more the Roth thing.
Yeah.
And I didn't realize, we bought a house pretty early on. We knew we wanted to have a family. And there was this thought 20 years ago, hey, if you don't buy now, it's going to be harder. And boy, has that turned out to be the case.
Yeah.
But I didn't get into any sort of investing other than buying a house until, maybe like the last 5 years or so. But what I didn't understand, it was my accountant that was like, hey, you need to start putting money into it. For me, because I have a business or whatever, it's a individual 401k, but for some people it'll be a Roth IRA. And the whole idea is if you have a good year as an AP, you're in a higher tax bracket. And at least for my thing, the 401k thing, it's pre-tax, meaning I'm making whatever that tax rate is immediately. So let's say, I don't know, what's a normal tax bracket if you have a good year?
Like what average you pay?
Sure.
If you're
like
making
20%
really, if you're
or
making
something?
really good money, 20 to 25% is your average.
Let's say it's 25%. I just made 25% return on my money having the markets do nothing. So simply by putting whatever I can afford or the maximum that I can do that year, I just made 25% return on my money by keeping it rather than it going to the IRS. Now I'll have to pay on that someday, but probably when I'm 65, my tax bracket will not be 25%. And so I didn't realize what a game changer that is in and of itself. Anything to add to that? Because I'm not really an expert in this.
Okay. If you're an AP and a full-timer, professional gambler, I highly suggest that you start a business and you just do a simple LLC. In terms of like protections and piercing the corporate veil and all that, it has nothing to do with that. it affords you the ability to be like a full-fledged business in a lot of ways. And a lot of that has to do with investing. So what you were talking about, Colin, thanks for mentioning this, Joe. Like, so when I say I give my money to a CFP on the autopilot stuff, I have multiple accounts with that CFP. I have a standard Roth. I have a Roth IRA. I have a 401k through my company. And then I have a brokerage account. I max out those first three, and then everything else goes into the brokerage. I have a mix of pre-tax and post-tax accounts. When you're making a certain amount of money, it is advisable that you take advantage of the pre-tax, but also blend it with the post-tax. And the idea behind a Roth is the money has already been taxed. So when you take it out, the taxes have already been taken. So the question is, do you or do you not believe that at the age of retirement or when you draw on this, will taxes be higher? I'd say the plus EV play is to place a bet on taxes will be higher.
Yeah, deficit keeps growing, and the only way to cover that would be taxes going up.
Correct.
Not the only way, but
yeah, they're
most likely
their favorite vehicle. So having pre and post tax accounts is really important. Back to the business aspect. As a business, I can contribute X as the employer of myself into my 401k. So if you work for a company and you're a W-2 employee, you have a cap of what you can contribute. And the company standard protocol out there, like for most companies, is 50% up to 6%, or maybe they give you a full 6% of match, free money. If you work for a company right now, do not short yourself and at least put as much into that account to get the full company match.
yeah, everyone wants some free money.
Yeah. If you are your own business, so that 6% that you standardly see, I have a max contribution that the company can give.
The company being
myself,
your LLC,
and the max that I can give. So I can literally put in way more into my 401k. I think it's like $30-some thousand this year than your average W-2 employee that's only getting that 6%. So it's not as complex as it seems. And that's why I say, like, if you have a good amount of money, working with a CFP is going to like be able to find those goals and be able to help you navigate these kind of things. But taxes are a big thing too. And this kind of stuff shifts too. The older you get, the bigger your nest egg is. You're going to start talking about how to position yourself tax-wise. And by the way, Roths are income limited. So when you make so much, they say, no, you can't put money into a Roth, or you're capped at this much putting into a Roth, because they don't want you. They want that tax money because they know the tax is going to be higher. So that's limited. However, as of right now, it still exists, what's called the backdoor Roth. So essentially, you have money you put in there that was not in a Roth, and then you can convert it into Roth funds and temporarily pay the taxes right now where they're at, and then that can grow and you won't have taxes later. That's a really strategic move too that can happen for you.
So what's the breakdown of the benefit of creating the LLC, max out the 401k versus just if you took that same money and had it in an individual account, like just a regular investment account?
You're not paying taxes on that money now. And so let's say it's that 30K and you're at a 25% tax bracket. I'm no mathematician, but that's $7,500 that I'm not paying in tax that I get to invest and keep, and then pay taxes down the road when I might be at a much lower tax bracket when I'm quote unquote retired.
Is there an age limit where you can do that, or can that happen at any point? Like, let's say like before whatever what is it, 65 for the Roth?
You can pull it out if you need to, but then you have to pay the taxes on it.
Right. But let's say I'm 60, for example, and I make like no money that year. Can I pull the whole entire thing out and then not have to pay a high amount of tax on that?
No, you got to pay the taxes. If you pulled out before, it's like 62.
Yeah, 62 or 63.
Something like that. So let's talk about S&P versus small cap, because this is other stuff. You know, I felt like such an idiot when my accountant's like, hey, you should do this 401k thing. I'm like, great. So I threw it in there and it just sat there for a while because I didn't know what to do with it. Eventually I ended up hiring a guy because he eats, sleeps, breathes this stuff.
Right.
Has a proven track record. For years, what it simply was S&P 500. And you could look at historically how it performs. That is like the simplest thing you can do. There's a Freakonomics podcast episode where they talk about, how many people try to beat the S&P 500. And after the fees that they're paying, they end up underperforming the S&P 500. So if you're like, I don't know where to start, throw it in the S&P 500. However, you made an interesting comment, Joe748, about small cap stocks. And what that means is smaller companies. And why would you put money into those when they aren't, Apple, Facebook, Google? Why would you throw money into those?
Well, the theory is the potential return would be higher, but the only downside is going to take a long time for that to happen if it does happen. So I am hoping that over the course of over 30 years, it's going to do slightly better than if I were to put it all.
Well, yeah. And the idea also is like some of these behemoths were small caps at one point in time.
Yes. So when I first, I had this 401k money and I hired a guy that was a financial advisor just to do a little analysis and like give me his advice. And he showed me this whole presentation with all these graphs and charts. And he made this one passing comment about like, oh yeah, and over the years, we put 20% into small cap growth stocks. And, that's actually where about 80% of the growth ends up coming from. And I was like, wait, if most of the growth comes from that, why don't I put all the money into that? And he's like, oh, you don't want to do that. And I was like, well, why not? And he's like, oh yeah, you don't want to. You know why? Variance.
Oh yeah.
He's like, oh yeah, people don't want the variance. But he was admitting that you might not live long enough to guarantee it, like the way the S&P 500, if you look historically, you're not going to go 30 years without S&P 500 giving you a good return. It's like, can you stomach the variance of small cap stocks? But they do historically perform higher. And so you're saying, yeah, I'm going to put some of my money into that because I'm willing to take the variance that you've got decades left for those to perform well, but not all your money into that because.
And you have to be a little bit careful about some of the small cap indexes because like I use Vanguard, for example, and their small cap indexes are not true small cap. Like they're blending a lot of mid cap in and they're calling it small. So you just have to do your homework and look at the percentage of what's actually in those.
And some of them can be high fee.
That's another thing in the investing world. You have to watch out for fees. Like I hear people talk about mutual funds a lot. Mutual funds cost a lot. This is another reason also, company-wise, if you work for a company and you have a company match, the cheapest vehicle to invest in with the lowest fees is traditionally a 401k. It's like next to nothing fee-wise. Mutual funds can get very high. Playing indexes, there's obviously not that much involved. But ideally, any good investment specialist is going to be, okay, what's your goal here? They're going to go through all these things, your risk tolerances and whatever. And the truth is most people don't operate the way we do. So they are scared of variance. And a person managing money, the reason that they want to point you in that direction is because they have experience with so many people freaking out when the market pulls back and the headache that they have to deal with people trying to pull their money at the most inopportune time when the market pulls back. When in reality, for some reason, it's the only time that people don't like a sale. When a pullback happens in the market, everything's on sale. And instead of doubling down, people freak out and pull their money.
Yes, I remember listening to a podcast that was talking about the 2008 financial crisis and that the one group of people that actually added money to their investment accounts were people over 60 because they'd been through it and they're like, oh, I'm not afraid of this. Everyone else panicked, pulled their money out and missed out on that opportunity for growth because, like you said, everything was at a discounted price.
When the market pulls back, corrects 20% or more, that is when millionaires and billionaires are made, and millionaires and billionaires double their money because that is opportunity. So don't be afraid of the variance. You can't check this stuff daily.
Yeah.
Looking at a card counting chart, good Lord, like it gives you anxiety.
Yeah. My brother, he does this stuff. He's an orthodontist. He said that his financial advisor said, just don't ever look. And he doesn't. My brother never looks at where his retirement stuff is because it doesn't matter until he retires.
Yeah, it's true. I check it kind of like on a quarterly basis. Again, because of my background, I check in with my lead guy and I just want to make sure that we're on the same page. But like that, it's a little different. You're right. Just ignore it. You're paying somebody that you trust and thinks they know what they're doing. That is your autopilot money. Compounding interest working for you. Let it do what historically it's done. So we should not ignore the topic that I'm sure undoubtedly somebody's going to say, which is crypto.
I just deleted that from my notes because I was like, oh man, I don't even know how to go down.
Can we do this in under 5 minutes?
Yeah. I'm just going to give a short and sweet thing about crypto. So the idea of fear of investing in the market is, what if everything goes to hell in a handbasket? A lot of people have lost a lot of money betting against the United States of America. Number one. Number two, if it gets that catastrophically bad, this is not your worry. The money is not your worry. That's how bad it has to get for it to be an issue. You can even go back to things in more recent times that were catastrophic events, even all the way back to the Depression. These things recovered. Unless you are at a retirement age right now, these things mean nothing to you. Keep putting money into it. So back to crypto, there are a lot of arguments on the crypto side about like the United States is terrible, it's inflationary, we've printed all this money. All those things are valid. I'm not saying that they're not. And I'm not against crypto. I think that some diversification is good. However, what I would say in my previous professional life in this world, don't put all your eggs in one basket.
Yeah, it's like, how much gamble do you have in you?
Right.
It could make you a multimillionaire. It could make you broke. And yeah, sure, if you want to play around and put some small percentage of your wealth into a high risk, high reward opportunity, remember, high risk, not just high reward, then go for it.
Like I have some crypto. I also have money in miners of cryptocurrency. I think that's a good thing to have. But whether you believe it or not, even the most diehard crypto person, it is 100% speculating. Just like playing GameStop, just like putting all your money on Apple, that's speculation, not diversification. That is trying to hit it big and get rich fast. And I traded options. Those are highly leveraged assets that can absolutely wreck you or make a lot of money very fast. You have to have a certain mentality about that and operate on a bankroll and have a money management system. That is how you speculate with money that you can lose. It is plus EV, but it's money you can lose. So what I would say about crypto is, don't think it's the end all be all. And just because it would have made $1 billion for you had you gone all in, that's irrelevant.
What has to happen for crypto, whichever one reigns supreme, to end up being as safe and reliable as an investment as the S&P 500?
Full adoption across the board. It has to happen. And the only one that's going to actually happen to is Bitcoin. And I will stand on that. Now, could I be proven wrong? Yeah, but that's the only one. That is the mega one. And people that get involved in crypto, and I recently had a very long conversation with a person that is quite the expert in crypto, and he used a phrase that I'd never heard before, shitcoins.
Yeah.
Which is 98% of the market.
For me, I'm not that much of a gambler. I think that's what attracted me to card counting is it's a measurable, calculatable, you can know your risk and then you can continually manage your risk. And I don't really want to take the money I've made from like the hard work at the tables or the hard work building Blackjack Apprenticeship or whatever, running teams, and then put it in something that feels like a gamble. But that's my personality, at least. I think I'll be bummed to see people that grinded so hard and made a bunch of money from casinos and then like threw it all into something speculative, but I'm sure it's going to happen to some people.
Yeah. There are vehicles that have made well over what Bitcoin returns have been. I mean, NVIDIA, like if you would have put your money in that stock 5 years ago, I mean, it's over $1,000 a share now. I mean, it's a behemoth of the market, and they're picking a stock or picking a crypto coin that you're like, this is the one that's going to go to the moon for all you GameStop people. Like, I get it, but just accept and understand what you are doing. You are gambling. Investing is not gambling.
Awesome. I want to end with something very easy and practical for people, which is, again, not a sponsor, but Wealthfront is something that I've started to put money into that I'm not ready to like invest long term. Right now with inflation high, it'll get up to 3, 4, 5%. And it's a savings account.
High yield savings
It's
account.
a high yield savings account.
Yeah.
So I'm thinking about people that's like, oh yeah, I've got my bankroll, but maybe you don't even need all of your bankroll. Or maybe you got your bankroll, you've got some other money that you're like, well, let me wait till the end of the year to decide the 401k or the Roth IRA or whatever. Why not make 3, 4, 5%? It's a savings account. It's FDIC insured. So that could be a very easy way for people to just be getting some return on their money. And to be honest, we were doing this stuff back when we were playing, not Wealthfront. It didn't exist, but there was like ING had a high yield savings account. And even if it was like 1 or 2%, it was better than zero sitting in our bank account.
Yeah, I use a high yield savings account for the specific purpose of, some people are going to hate me when I say this, I can't wait until the market craps the bed because, again, back to what I said, opportunity, and I have cash on the sidelines to throw in. And I'm not just going to keep that in cash or in your standard bank account or savings account. It's in a high yield savings account. Maybe I am losing 1% or 2%, but I'm not losing 6 or 7% on that money. So I'm trying to stay basically even on it while I wait for the opportunity.
Yeah. And it doesn't have to be because you're waiting for the markets to crash. It could just be that, hey, I don't need access to full. I've got 100K bankroll. I really only need 50 right now. Let me throw the other 50 into a high yield savings account and get something on it in the meantime.
Which is essentially the same thing.
Yeah.
Really.
Yep. Same thing. Awesome. Hopefully this is interesting to some people, but I do want to say, don't at me if you don't like our take on investing. I am not a financial advisor. It's a question that we get, and I thought it would be interesting for us to share kind of our approach to it. If you are a financial advisor and you've got strong opinions one way or another, feel free to share them on the forum or anywhere else. But this is just us trying to share how we think about this stuff, and hopefully it's helpful for you all listening.
You can at me at SD1 on Twitter, and I will tell you are wrong. No, I'm just kidding. There's definitely various opinions. I think the big thing to take from all this, and this conversation is real. I love that BJA is tackling this. The takeaway is don't major in the minors. The major is put your money where your money will make money. Don't sit on cash.
Yeah, that's the AP play.
Yeah, it's the AP play.
Awesome. Thanks so much, SD1, for being a part of this mailbag. Thank you, Joe748. And for those that want to learn more about card counting, Blackjack, Advantage Play, go to blackjackapprenticeship.com, and we will catch you guys next time.